Alright guys, welcome back. This is going to be another trade review. This time it's going to be on crude oil futures. Okay, well, so for this trade, first off, this trade was conducted on January 13th, 2023. And this chart that you're looking at is on a 30-minute time frame. You can see that is 30-minute time frame right here in the upper left-hand corner. Now, for this trade, I was looking for a sustained auction long, meaning I just wanted to see price continue to make higher highs after breaking this initial balance range to the upside. And in hindsight, that's exactly what we got. I did take the trade long. I will just show you guys that you could get the trade direction wrong. I mean, correct. You could get the trade direction correct, but if you micromanage a trade, you could get stopped out in areas where you otherwise should not be getting stopped out at, which is always why it's a good idea to keep your intraday time frames set to either a 15-minute chart or a 30-minute chart, and not be staring at a 1 or 2 minute, 5-minute chart. Okay, so for this trade, I was looking at this initial balance right here, and I was seeing that this initial balance. Okay, well, before I say that, you guys need to know the context of where we open in relation to yesterday's value. So down here in the bottom right hand corner, it says open. This means price open inside yesterday's value. So price open inside value. So that's, first off, that's never a good sign to look for momentum trades, because there is not because overnight inventory is not either long or short. The market is balanced. So to look for a momentum in one direction or the other is a little less likely on days where we open inside the previous day's value. Now, this purple line, these two purple lines right here, are my value area high, which is 78.88, and value area low, 78.30. And this value area is only using the previous day's New York session value. It's not the 24-hour period. It is just strictly the New York session. Also, for this trade, I did use ADR, your average daily range. So ADR, when we opened, was at 56%. So in my mind, okay, this is not an ideal situation to be in to look for a momentum trade. ADR is fresh, so that's good. But since we opened inside value, it makes it a little less likely. But because ADR was still fresh, only at 56%, I said, okay, you know what? A longer term trend, if you zoom out, for the past week or two, we've been making higher highs and higher lows. We did have some supply, which is this gray area here, which could have acted as a roadblock in this trade. But you know what? I just decided to go with the trade. After this initial balance was over, I decided to put a buy stop order just above, a few ticks above the initial balance high. So if price came into that limit order, it will execute and I will be long. Another reason why I did decide to take this trade is because the initial balance was small. Now, how do you know if it's small? You measure the high to low. So the high to low, the initial balance, was only about, let's round up and say 60 ticks. Okay, 60 ticks. Now what does that tell you? It doesn't tell you much. But you measure that in relation to your ASR, your average session range. My average session range is down here. it is 225 ticks. Now, in a small initial balance, it's considered anything that is 2/3 of your ASR. So if we use a calculator, let me pull up a calculator really quick. So anything under 2/3 of ASR is considered a small initial balance. So during this time, during this candle, ASR was, ADR was at 56%. We were at 57 ticks for the day. Okay, and I had said it is 60 ticks. All right, do 60 ticks. 60 divided by your ASR, which is 225 ticks. So 60 ticks, initial balance range, divided by your ASR, gives you only a 26%. That is under 2/3 of what is considered a small initial balance. Okay, so check. ADR is not exhausted yet. It is at 56%, and we have a small initial balance. So those are two check marks for me to look for a long opportunity in this trade. So I took this long, and I set stops just a few ticks. Alright, actually I could have set stops a little bit lower than this 30-minute candle, but it is what it is. And I was looking for 2R on this trade, which again we did hit at the very end of the day before the markets closed. But with this trade, I will be honest, I did exit early for a scratch. I scratched this trade on this candle right here. And you may be saying, why would you take a loss on that trade if there's a huge candle wick? I'm like, yeah, that's exactly right. But I decided to go to a lower time frame, and you will see that this 5-minute candle got me stopped out. And which is why you should not be using lower time frames for trades like these. You should be using a 15-minute candle or a 30-minute candle. So this 5-minute candle, I saw this, I was like, you know what? The trade is not going in my direction as quickly as I wanted, so I will just take a scratch. I will just scratch the trade, and that's okay. But hindsight, and what I will do better for next time, is I will wait for the 30-minute candle to actually close, because when you have a sustained auction, meaning that you have a 30-minute TPO that closes outside of your initial balance. So this candle came in, it closed up here, as you can see on a 30-minute candle. The 30-minute candle closed above the initial balance. So okay, that is a sustained auction. Next candle, D period, right here, right hand side. D period closed even higher. So okay, this is for sure a sustained auction. Now, if price were to come back and test this initial balance high, you have to see if prices will react, if it is reactive, which is exactly what happened here in this trade. The price came to test the initial balance high, prices reacted, there was buying here, and prices continued higher the rest of the day. So that was my mistake, just going into a lower time frame and micromanaging the trade. You know, should have stuck with that higher time frame, and I should have still been in that trade and gotten a would have been an almost full 2R on this trade. But you know, hindsight is beautiful and doesn't exactly go as planned. You know, nobody's not perfect, but we are here to better ourselves as traders every single day we're in the markets. So that's the end of my trade review. Hope you guys enjoyed.